Good morning, everybody. This is Dennis Wilborn, the Active Trend Trader. I'm bringing you today a recorded session for our How to Make Money Trading Stocks, Options, and ETFs for the 6th of September. As you're probably all aware, I was flying yesterday and the day before, coming back to California for our reunion, my high school reunion. I won't tell you how many years it's been, but hey, I've been watching the market this morning. I wanted to get out our watch list to everybody, our elite watch list. No big surprises there. One of the things that we did have on Friday that we'll want to keep our eye on is we did have some breakouts on both the S&P and the NASDAQ and a couple other types of stocks, but in the indexes. However, these breakouts kind of provide a kind of a poor structure. So they're suspect whether or not they may continue on up, make new highs and all that kind of thing. However, until they get the Russell on board and also the FANG stocks on board. The FANG stocks are really lagging. The other poor structure with the S&P and the NASDAQ is they had two gap up days in a row. There will be an attempt at some point to fill those gaps. Until they are filled, it does make the market suspect to pretty strong reversals. And also, if the Russell and the FANG stocks do not get it in gear, also leaves the market suspect to unsuspected and fast pullbacks. So, hey, keep an eye on that. Now, enjoy the rest of the webinar, this recording, and we'll be back to our regular schedule starting next week. Aloha. God bless everybody. Hey, good day, everybody. This is Dennis Wilborn. I want to welcome you to the recorded session of How to Make Money Trading Stocks weekly live stream. As you can aware, this is not a live stream. This is actually a recorded session, as I said in the earlier introduction. But let's jump right into it. I am in the process of traveling from, I'm going to my high school reunion this weekend. I'm going to see some old friends that I haven't seen from a long time, and so we're looking forward to it. It's going to have a good time. But still keep my eye on the market, and so that I can make sure that I keep all active trend trading members up to date on what's going on. And we had some exciting times in the market going into it. The question is will this rally last, or is it a breakout fake out? We shall see. Remember, learn to focus on the process, and the profits will follow. A reminder, all materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication nor promise for future performance. Even though we had the S&P breakout, the NASDAQ breakout from a trading range, the area of concern is the Russell. Russell did not break out. So I'm going to still categorize today's market as being mixed, or yesterday's market as being mixed, the whole, kind of the whole week. Now, if the Russell gets on board with the uptrend and people start piling into the small caps, will give us a secondary consideration that this rally may have some strength to it. It doesn't mean that we're going to, that the S&P and the NASDAQ isn't going to go on up and make new highs. The Russell can lag, but if the poor structure in the market would continue, it makes the market susceptible to really rapid failures. And so we want to be very careful going forward in that condition. So as we say, hold your convictions loosely and your stops tight. Here we're sitting as of close of business on September 6th. We're up about 21% for the active trend trading system. Dow's up 14, S&P up 18, NASDAQ 24, and Russell up 11. As you can see over here, both the S&P and the NASDAQ are back above last year's highs. and moving nicely. I'm going to get over to the charts, and I want to remind everybody that one of the things that for all active trend trading members, both premium members and also members who just get their free content, we do provide our elite watch list to them. Now, this elite watch list, give you a little background about it, is the IBD Investor Business Daily comes out with 13 different watch lists on the weekend. Premium watch list that meet their criteria. What I do is I go into those and I dig into them to come up with what are the best of the best. In other words, we're taking the best of the best and making it better and providing what I call power rank listing. And also, we also capture every stock that has been on the IBD 50 since the beginning of the year, and that is provided as a free service to our members as just one of the attractions. And we'll be taking a look at a couple of these stocks here. I want to draw your attention really quick. Lulu and CPRT. We'll take a look at those charts as we move forward. Let's get over here to the charts of the, as you can tell, I am broadcasting from only one screen, and so that's always a little bit fun. You got weekly, daily, that's good. So let's get over to the S&P. And we'll use the spider as the default mechanism for the S&P. I've highlighted in here, here is the little box that we have been watching now for, oh gosh, several weeks now, as you see. And so some people call this a control zone or a control area where price action has just been moving back and forth, moving back and forth, moving back and forth. So the question always comes out is, was this an area of accumulation or was it distribution? With a breakout up the upside, it looks like it may be an area of accumulation. What is our upside target on this? Well, your upside target is just basically take the width of the box, which in this case is $12.43 on the S&P, add that to the high of the box, which is $294.15, and that gives us an upside target of about $306.58. Very interesting is that just happens to be, depending on how quickly it makes it up there, there's at the end of the month, that is $306, brings us right back up in line with the megaphone cop that we've been watching for over the last few weeks also. So if I were to look to, I'm not really looking to trade the S&P. I would prefer to trade the NASDAQ, but if you want to trade the S&P, either with options and or you want to trade the leveraged ETF for, which I think is UPRO, for the S&P, look for a trigger off of the top of the box back here, down at this level, somewhere I would say 294 to 295, and that could trigger you into a nice trade to the upside, or watch for a bounce off the 8-period moving average. The 8-period moving average, as everything is breaking back to the upside. If, for whatever reason, this formation fails and we drop back down into the box, that would be a sign of weakness, and so we'll be watching for that. There are two areas I will highlight to everybody. Is there was a gap up here and there was a gap up here. When it bounced off of the 820 price action, that bounced off of the 820, gap up, gap up. Those gap ups will at some point need to be filled. Until they are filled, that does make this move up, suspect. However, that is not necessarily a reason why you can't expect prices to go ahead and move all the way back up into the megaphone top, which will be up here about the $306 level. I did a little bit of I promised my wife I wouldn't do any more fibs for people, but if you know how to use Fibonacci's retracements, do a fib from the high here, 302, down to the low here at 282, and you'll see that it comes up right up to 306, or approximately 306 on the 1272 extension. The Qs, similar thing, situation. I like the Q box. Oh, that's kind of cool. The Q box. Working out the high of 189.68. You can round that up to 190 if you like. That's where we'd anticipate prices moving back down to potentially bounce. Again, these gap ups over the last, we had 1-2 days of gap ups last week. And so while that's really exciting, and if you're on the right side of the trade, that works very much in your favor. But at the same time, those gap ups will be filled eventually. We just do not know when. Our upside target on this particular move is about the $200 level, and that is taking the low side of the box, which in this case, let me draw the box in there for you. That is not the box. Let me draw a box in there. There we go. So let's say that's approximately the box. That box is $10.48 wide. The trajectory up from the 189.68 level would bring us up to $216. Again, similar rules apply. A failure back down into the box would make it suspect, especially if it broke through the moving average. Suspects of going down to the bottom of the box and then breaking out the bottom side of the box. So up until that point, just look at price action. You can lay it on I don't want that. I don't want that. There we go. Let's draw a little line up here. Let's look for price action to continue on up. And at current trajectory, that puts us up to the $200 level at around the end of September. Now, can it get up there faster than that? You betcha it can, but that'll give you some idea. Now, let me throw a monkey in the or a fly in the ointment here, a monkey in the wrench. No. As we saw with the other indexes, price action was working in a box. Well, it's been that way also for IWM. However, IWM has also been working in this downtrending channel. We have broken out of the downtrending channel, but where did price action stop? Price action stopped right here at right below the 50 and right below the 200. So if price action are to continue, we could expect a move back down to retest the channel and then a bounce up. But we've got to take out these higher levels. Up at the top of the green zone is one good area. Needs to be taken out in order to really, that would show that the small caps are behind this rally and give us more oomph to the upside. So that's what I'm looking at with IWM. Again, it's just approaching the top side of its box. And if you take the high from Thursday at 151.91, let's just say 151 or 152, we get a close above 152. That would probably give us some legs to the upside, at least back up to retest the highs at 157.81 up to 159. A failure, as we say, a failure here, or if we take out Thursday's low and the moving averages, we can fall back down into the downward channel and retest back down here at the 145 level. So, and then as promised, I wanted to throw on two of the stocks we're looking at. Now, Steve would normally be covering these IBD stocks regarding the breakouts and all that type of stuff. And what do we have going on here? I'll just lay this out for you. We had Lulu had earnings on this day after the market, gaps up the next morning, gapped above Pat, so we're at all-time highs. So what would be a trigger to get us potentially into a trade on Lulu? Well, let's just throw on let's just go to the highs. So any type of a pullback down towards the breakout level at 194.33, would potentially give you a reason to jump into a trade on Lulu. Now, does it have to get all the way back down to the 194.33 level? No, it does not. But we'd anticipate some kind of about 60 to 65% of all stocks that break out do some sort of a pullback towards the breakout level. And so that's what we'd be looking at. I really like this is really good buying volume here on a daily chart. And that was carried over also into the, sorry that is showing up there, also carried over here into the weekly time frame. Also good buying that came into here. And isn't it interesting that happened on each one of the preceding earning periods? And if you'll see real quick, Lulu tends to go in a little bit of a stair step type of progression, or stair step, stair step, stair, and then now it's going into its next step. So give us a projection up. If we throw a Fibonacci on there, I'll bet you it comes up with one of its extensions up to about 217 to 220. The other one we'll take a look at is CPRT. CPTR, also getting a nice breakout with increased value, above average volume on the daily chart. Not so much, just back up to weekly, about average on the weekly chart. However, it is considered a breakout. We broke out above the 70 level, let's say $80 level. Any type of a retest back down into that level, approximately, and like I said, let me give you a number. 70, if it gets, approaches 79, 75, 79, 80, 85, that could potentially provide us a trigger to get back in or get into the trade on CPRT. And how would you trade that? If we, traded the pullback back into those levels, then I would look at any kind of a drop back below the 8-day moving averages or 5% stop loss would be appropriate. So that's what we have for the stocks for this week. Let me go back over here. Seasonality, we'll look for seasonality to kick in. We're in the September, October timeframe now. As you can see, NASDAQ mid-September can have a tendency to kind of sell off into the first part of October and then go into the year-end rally. Same on the Russell. Of course, the Russell has been weaker than the other indexes all year round. So, will we get this, or will we get basically a pop-up on Russell? We'll have to watch for that. Lastly, hey, if you do need a speaker for any of your groups, give me a buzz. I can set up, if you're in Hawaii, I can set up to come and speak to your group there, or we can do a live webinar. Have done many of those in the past and look forward to doing them in the future. Next Saturday, the 14th, we will be having our monthly Bay Area Moneymaker meeting, and that is a live webinar. We're going to be talking about preparing for record profits and the option with options. I've got a free webinar that is in the planning and coming up that you don't want to miss. It's Swing Trading Secrets. And if you are a active trend trading member, free or premium, you will get a personal invite to that free webinar. So that basically does it. Hey, let me help you find the top 2% of the stocks that are out there. Get your free weekly watch list update here, and just go to this, and you can sign up on our on the website. No obligation, and you'll basically just have access to both the access and free invites to the weekly webinars and the freely updates to our watch list. So that'll do it for this weekend. I want to thank you for watching the video. Please